Joining us now as our guest host for the next hour or so is Jim Rogers, chairman at Rogers Holdings. Well, great to see you. So your take on what the Chinese did. Certainly, we had really divergent moves. Some saying it was a votive conference with the Chinese government, that they are on the growth track, while others say maybe are they on a tightening cycle that is just getting started.
Well, raising interest rates is good anywhere in the world here in 2010, the end of 2010, because we have more inflation ahead of us, and it's going to get worse. However, it just attracts more money into China, which means more money sloshing around, which causes more inflation in and of itself. The Chinese have gotten themselves in a bit of a bind as long as they have a blocked currency. It's not good for China to have a blocked currency, and I think this move is going to demonstrate even more.
Ultimately, they're thinking of throwing in capital controls as well to stem some of the hot money flows. Is that going to work?
Listen, whenever you have artificial controls, they work sometimes for a while, but then they always lead to unintended consequences, and it's not good for anybody. No country in the world that's had capital controls has been happy about it after a few days, months, years. It just doesn't help. It makes things worse.
Jim, it's nice to see it's Ross here. Is this move from China, is this just literally just a domestic issue? They want to rein in a little bit of bank lending, raise deposit rates for savers, or is it their way of saying we don't want to share more of the brunt of the dollar's devaluation?
I think what it probably is, Ross, more than anything else, is to try to do something about the real estate bubble. They do have a real estate problem in some of their urban coastal cities, and this is the way to do something about it. You cause the real estate developers to have higher interest rates, plus you make it more attractive for people to save their money rather than to spend their money. I think it's aimed at that. There are probably better ways, but in a broad brush, this is their attempt at the moment. They did not raise reserve requirements, at least I don't think they did, and so therefore they're not trying to cut lending, they're just trying to make it more expensive.
So 25 basis points, Jim, as you know, not very much at all. Is it a tension release? Is it also a political move ahead of the G20?
No, I'm sure it's partly to do with the G20. All of this is basically noise, because something is going to happen at the G20, it seems, maybe, finally. You know, for the most part, it's a waste of time, energy, and money, the G20. They should just leave us all alone. But it seems to me that something is building up for the G20. I don't know what's going to come out of it. I'm sure it's not going to be good for any of us. It may be good for the 20 guys who show up, but something's going to happen.
I'm surprised, Jim, you weren't invited. But you are invited to stay around for the rest of the hour.
If I were invited,
sit right there for a second.
Why would anybody go, Nicole?
You wouldn't go if you were invited? Come on. You're invited to all the best happenings all around the globe, I'm very sure, as long as they give you chocolate and soda.
And as long as the best happenings are at CNBC.
Jim, is B of A a buy? It is trading well below book. As Dick Beauvais has come out, it is also it looks like it could be a steal at this time.
Nicole, nobody knows what book value at B of A is, including B of A. Yes, I know that the balance sheet says something, but you just pointed out they may have to buy back skillions of dollars of bad paper. If that's the case, the book value is going to decline dramatically. I have no interest in bank stocks these days. You know, the banking industry had a gigantic bubble. Normally when a big bubble pops, it takes years for the stocks to become really attractive again. Yes, if you're good at buying them here and selling them here and selling them and buying them again here, sure, they're going to be in a trading range for 5, 6, 7 more years while they work out their problems. This is not a way for me, anyway, to make money, because I'm not a good trader. I like to buy something where there's either a secular bull market or a secular bear market that I can sell short.